Hello and welcome to the Future Food Finance podcast. We've got another brilliant guest this week. We're joined by Brad Nattrass, who's the CEO of URBAN-GRO, which is a US-based controlled environment agricultural specialist. So Brad gives us the full skinny on URBAN-GRO, talks about life as a Nasdaq-listed company, and then talks about the fortunes of two very hot food tech topics, vertical farming and cannabis cultivation. So please check it out. It's coming up. And also remember to subscribe to the podcast on YouTube and Spotify, and check into the Future Food Finance website, where each week we detail how the best performing publicly listed food tech companies are performing. We are talking to Brad Nattrass, the co-founder, CEO and chairman of URBAN-GRO, the Colorado-based controlled environment agricultural construction specialist. Thanks a million for joining us, Brad. Great to have you on. So to kick things off, can we just get a potted overview of your career today?
Yeah, you bet, John. Thank you very much for having me on today. John, I'm actually Canadian, born and raised. After I finished college, took my undergrad in Calgary, Alberta. Worked with Cargill, the large global agriculture company. I worked with them for about a decade, and they transferred me down to the U.S. and around the U.S. I then thought it would be easy to be an entrepreneur, so I jumped over into the wonderful world of entrepreneurship a little over 15 years ago. A variety of companies, leading up to before URBAN-GRO. The same co-founder of URBAN-GRO and myself, we had a lighting company, and we would retrofit energy inefficient lighting solutions with LED solutions in hospitals, convention centers, small cities. And in our backyard in Colorado, cannabis was rapidly gaining momentum and legalizing. So my business partner and I dipped our toe in the water, and here we are today, a decade later. URBAN-GRO operates in many sectors, including the CEA sector, composed of cannabis and food vertical farming, as well as healthcare, industrial, hospitality, and other commercial segments as well.
Okay, that's fantastic. So, I mean, in my intro, that was a bit of a mouthful. I described you as a CEO construction specialist. Is that the right way to describe? And just give the listeners an overview of the size of the company in terms of employees and approximate annual revenues.
Yeah, you bet. As we have 150 employees today, we listed on the Nasdaq in February of 21. With the uplisting to the Nasdaq, we successfully raised $62 million, and with that began executing our acquisition strategy. We acquired architect firms, engineering firm, and a construction management firm. So combined today, 150 employees, and that's composed of architects, interior designers, all different types of engineers, construction, management, project managers, site superintendents, and then also a team of horticulturists as well, who have 10, 20 years each, growing a variety of different crops.
Just on that, can you give us approximate kind of annual revenues?
Yes, we've given guidance this year to exceed $90 million in revenue. That is almost 50% year-over-year growth, and expecting to keep the momentum going in 24 and beyond in multiple sectors.
Right, that's great. So you mentioned the Nasdaq listing then. That was 2021. The listeners will be interested in this. What was the thinking behind that at the time, and what would you say has been the principal advantage and maybe the main disadvantage to being a Nasdaq listed company?
Well, we had listed before the Nasdaq on a smaller exchange, the OTCQX, and we had executed that public listing, or IPO'd, in order to gain access to capital at fair rates. Early on in the process, we were engaged we didn't touch the plant, but we were engaged with design and value-added reselling of equipment into the cannabis space. And early on, the only way to really make up for the risk on an investment would be to take a lot of equity, and we didn't want to go down that path. So access to capital was the main reason we IPO'd in the first place. And then the Nasdaq, it was a natural progression for us in order to attract institutional investors and larger sums of money. We would also have it gave us the visibility into a much broader market, allowed us to raise substantially more money and execute that acquisition strategy and expand. Today, we operate out of 6 offices in the U.S., and we also have a European entity based in Dordrecht, Netherlands. Mm-hmm. I can dive into that a little bit later. But we listed on the Nasdaq at the perfect time, John. It was the height of the cannabis craze, the cannabis momentum, not craze. Entering at the same time the food and produce vertical farming market. It was early on, and so we were able to raise substantially more than we thought we would, actually. And so one of the advantages of being public is you can access more capital when you need it. Fortunately, we have not needed to raise more funds, and nor do we as of today. And so it's been a good run. The downside is the external factors out of your control that can affect the company and the company's valuation. When we listed on the Nasdaq, our valuation was 100 million, our market cap. It grew to over 150 million. And then although we were diversifying to other sectors, as the cannabis market started to take a downturn about 5 quarters ago, our equity valuation also followed that. So today, with no debt, 7 million cash entering the Q3, and revenues of forecast to be over 90 million this year, our market cap is only 15 million. So that's painful. And the other, one more negative I'll add: the cost of being a public entity amounts to about $3 million per year. When you look at the price of having a board, all of the SEC guidelines that we follow closely, the SEC, securities, the auditors, et cetera, it's about $3 million. So looking forward to delivering strong results and getting our market cap back up in the near future.
Yeah, wow. So, I mean, from a prestige point of view, how does it compare to other stock market? I'd be interested in, perception-wise to kind of London and New York. I mean, I guess is there a big difference or?
No, I would say they're in line. London, New York, there's only 2 large exchanges in the U.S. or primary exchanges. That's the New York and the Nasdaq. The TSX in Canada is the largest exchange there. We did cross-list on the Frankfurt exchange to give investors in Europe easier access to acquire our equity. And from a prestige standpoint, we have 4 covering analysts of the company. That's great to have those experts following us and giving price targets and consensus of where they think will fall. Definitely a lot of it's not for the faint of heart. It's high pressure and stressful venture, but I love it. I wouldn't change it for the world.
Okay, that's good to know. So I had a look at the website, and in your intro, you talked about some of the work and some of the kind of different disciplines that you have at URBAN-GRO in terms of staff. So I just looked at some of the case studies. So there was, for instance, an indoor farm in Somerset, Massachusetts, which is the only energy independent cannabis cultivation and dispensary in the US. And then there are other examples like I think there's a cancer center, a fire station, and schools. So, I mean, can you just kind of summarize it? So, for instance, on that indoor farm in Massachusetts, what's the work that you do? Can you just kind of talk us through how you would work on that then?
Sure. On a facility like that, URBAN-GRO, or on any facility, we will either do a la carte and we will bid just on perhaps the architecture piece or the engineering piece alone or the construction piece. But we've been going to market now for 6 months with all combined entities as a design build firm. So we're really leaning on building on the entire project. But we will bid on an RFP. Once shortlisted, we'll interview, we'll take in experts from each of our three main areas, architecture, engineering, and construction. And if we prevail, we'll handle it end to end. We'll put a site superintendent on site. We have a project management team within the company. We have a phenomenal savvy, forward-looking portal that has it's vendor-facing and client-facing. Think of it as an advanced project management tool, so our clients know where we stand at each phase of the project. Vendors can access it in order to communicate efficiently with us. So really a great productivity tool. And once we have finish the architecture and the engineering, we get to construction documents, and then we're not a performing general contractor. So we manage the entire process. It flows through URBAN-GRO, but we will put out our own RFP for the general contractors, the individuals who are, quote unquote, swinging the hammers. We will manage that process on site. If it is a controlled environment agriculture project, one of our value adds is the value add reselling of equipment systems. So we will be involved in the planning, the procurement and integration of mechanical systems like the cooling, the environmental control systems, delivering the nutrients to the plant, the flow of water and air within a facility. We work on the wastewater treatment according to local regulations. And then we move to the final commissioning of the facility, regardless of what sector it's in, and then hope to be involved on an ongoing basis from a maintenance standpoint going forward.
Okay, right. Okay, well, I think, and I mean, in terms of the facilities you're working on, is that? I mean, I mentioned a kind of a range, then, didn't I? I mentioned the fire stations, schools, and the cannabis cultivation facilities. I mean, is there a kind of a sort of preponderance of one? Is there a sway, or is it kind of a broad range of facilities that you're working on?
So our expertise and our history is in controlled environment ag. So from the food produce vertical farming standpoint, we are more focused on working on optimizing current facilities that have already been built, working with our clients on wastewater treatment. We had opened an office in Dordrecht in the Netherlands initially to design build 20 urban vertical farms. Unfortunately, about 2 weeks after we had our team in place, the war in Eastern Europe broke out, and that really decimated the horticulture space. Fortunately for us, there's a lot of momentum right now in the cannabis market in Europe. It's sort of where the U.S. was 6-7 years ago. But from a historic standpoint, the design build of cannabis facilities, really any CEA facility agnostic of the crop, that is the company's specialty. But when the market began to turn in the U.S. about 5 quarters ago, we saw the need to diversify, to keep the company strong so we'd be in a great place when the cannabis market would recover, which we still forecast being 2 to 4 quarters out. And so today we're a company with 150 employees that about 2/3 of our business is outside of the controlled environment ag space. We made those acquisitions. Those acquisitions had great contracts both in CEA and also outside. And then we were successfully able to integrate our other solutions in. One example, we work with a large consumer packaged goods beverage company, a global company. We were just doing construction before, but now today we're not only working on the engineering and the architecture and the construction. We've also, through a national supply relationship we built with the mechanical company, have sold in mechanical systems to one of the projects. So it's the diversification was essential for the company to remain strong until cannabis recovers. But we have opened our wings and are now experiencing success in all of these different sectors.
Okay, that's really interesting, Brad. So we'll talk about cannabis in a minute. Just going back to the Netherlands and vertical farming. So vertical farming, I'm sure listeners are aware, it's been kind of this hot new ag tech trend as a way to localize food production in a controlled environment. But certainly in the UK and Europe, there's been something of a kind of recent backlash with, you mentioned that example there, and there's been some high profile closures and job cuts. For instance, Europe's biggest indoor farm, Infarm, and I think there's kind of been various reasons attributed to the recent troubles of vertical farming. What's your? I mean, is vertical farms in the US having facing similar troubles, and what's your perception of the market moving forward?
Well, the future of vertical farming depends on water and energy. Right, making sure that you're operating the facility in its most energy efficient way possible, perhaps building a facility beside a 24-hour operating facility like a hospital and turning that waste heat into energy. And then also just the efficiency of water usage. But similar to what you just explained, John, in the US, these large scale, multi-100,000 square foot vertical farms that are working hard on replacing field farming, it has been tough, right? And I believe that a industry coalition would be a smart move, where they're promoting, like the cheese board or the meat board, promoting the benefits of growing indoors. The fact, of course, that fresher, longer, reducing emissions and on the deliveries or the transportation, and then also the fact that there's biological insects used and not pesticides. But we've taken it one step further. One of our board members, her name's Sonia Lowe, and she was the CEO of Crop One, and most recently she was the CEO of Larry Ellison Sensi Ag in Hawaii, and her vision, which she is executing on now, is the build out of urban vertical farms. So with this vision, it would be bypassing the regular grocery distribution network and having vertical farms built with a small retail presence in high populated areas. Very similar to what you see in parts of Europe, smaller stores that people visit more regularly. And so I feel in the quarters and years ahead, Sonia will step out with a model that includes this retail front and the indoor vertical farm growing of table greens, and also berries. Strawberries, I believe, will be the first to be successfully grown indoors. So we're fortunate to have a visionary like Sonia on our board, and look forward to the opportunity to help build her vision in the future for her.
So those urban vertical farms, you can see them in the US at the moment, can you? Or
yeah, the larger vertical farms, yes, a variety of locations all across the country. Some of the ones that decided to go public have had a tough run, especially those that took the SPAC, reversing into a SPAC.
Like
yeah, that part of it's been tough from a public market standpoint, but those who have stayed private and raised funds privately are working the right direction, and it's definitely essential. It's not a matter of if, it's just a matter of when they become prevalent around the world.
Okay, and just go back to the Netherlands again. So you kind of said you've kind of skewed the business. I mean, what type of work are you doing in the Netherlands at the moment then?
We opened the office in June of 2022, and we hired an individual from a pre and post production equipment automation company, packaging company. And we've been operating in the cannabis industry in Germany, Switzerland, Israel, the UK. I can jump into that for you, and North Macedonia, and some interest in South Africa as well. But the two, all design, no build so far, and some equipment integration. But I believe that we're, in the Q4 now for 23, we're quite close on having a couple of breakthrough accounts, one in the Netherlands and also one that we've been working with in the UK as well. So I believe that the momentum in cannabis in Europe is equivalent to where it was in the US 7 years ago. Germany and the pending legalization and working out their regulations, it's going to be a great market for the cannabis industry and also URBAN-GRO. And I was at the Benzinga conference listening to Boris, the executive chair of Curaleaf, speak a couple of weeks ago. And he believes a decade out, the European market will exceed that of the U.S. Cannabis market. So great opportunities for controlled environment ag and cannabis in Europe.
Okay, that's very eloquent, and that's really interesting. So just talk about, I looked at your second quarter results, and you've alluded to this several times during the podcast about the pressures facing the cannabis sector. So for the uneducated, which I guess to an extent includes me, can you just talk a bit, shed a bit of light on what these challenges are? I guess they're regulatory challenges, are they?
It's predominantly to do with the taxes and the 280E regulations. But cultivators, operators in the cannabis segment in the U.S., and also those that operate retail dispensaries, they pay exuberant taxes, and it's due to the scheduling of cannabis as a Schedule 1, that of a narcotic. So as a result, there's paying about 70 to 80+% effective tax rate. The rescheduling of cannabis to which has been put forth now to the to the feds, that would reschedule hopefully to Schedule 3, and that would free up for the large multi-state operators anywhere from $50 to $150 million per year. So that would be a phenomenal step forward for the industry. I believe it will allow the industry to start to experience rapid growth again, and the CapEx expenditures will increase to levels that far exceed where they were about 6 quarters ago. So the SAFER Act, or Safe Banking Act, allows the operators to access traditional banking lines, to list hopefully on large exchanges like the Nasdaq. And with that listing, it will enable larger institutional investors to take positions in these companies as well. So there's lots happening. However, John, the chances of a safer banking act being approved this year, they're rapidly diminishing. The lack of a shutdown was great, but there's a potential government shutdown coming up. There's no speaker right now, so that would probably push, definitely, in my opinion, to 24. The rescheduling, big date is at the end of November, where they would open it for comment period for rescheduling to Schedule 3, and then the decision would be made in April of 2024. So two large, big factors that will have a phenomenal effect on the overall industry. Unfortunately for URBAN-GRO, we have about 20 projects right now, John, that we are in design or have finished design in legalized states, but because of regulatory issues and legal issues within these already approved legal states, the licenses have been put on pause or they haven't been awarded. And so for URBAN-GRO, as these states figure out their issues and they award their licenses, we're confident that we'll be able to rapidly move these clients to our build stage, because once they have a license, they can access their funding. We've had two glimmers of hope in the last 2 weeks, a smaller facility in Massachusetts and then also in Mississippi. They had been paused for 9 months with us, roughly, each of them after finishing design, and they both signed, and we announced that we're moving forward on builds with them. So slow but surely, the industry will definitely come back to life here.
Okay, that's fantastic. My colleague actually does a monthly roundup of the performance of ag tech and food tech public listed companies, and I think it's written recently a bit about URBAN-GRO, because I think you have, from my understanding, there's been kind of a flurry of, as you mentioned there, contract wins, and I think that's obviously spelling good news for the company, is it?
It is indeed. On our last earnings call, we had at the end of Q2 approximately $70 million of backlog, $70 million of signed contracts that would be realized and turned into revenue in the following 2 to 6 quarters. And I also stated that we had more than that amount out for signature at that time. So we, as we're signing contracts now, you'll see, I believe the smallest is $1.5 million and the largest was $11 million, but we're going to continue to communicate well to the marketplace and announce these contracts. It's all part of URBAN-GRO, sharing the message that we're very proud of our association with CEA, but we're also much more than just a cannabis company. We're a professional services consulting firm that operates in multiple sectors.
Okay, that's fantastic, Brad. So last couple of questions. I always like to ask our guests about outside of their own offering, what is there any particular types of ag tech or food tech you're particularly excited about at the moment?
That's a great question. 2 years ago it was robotics. Right now, robotics is making its way through the horticulture industry. I believe it's still early, but the future of horticulture, and I'll leave it at vertical farming right now, will be based on technology and AI. And AI starts with the data that's captured within the facility. And we, about 3 years ago, invested a total over about an 18-month period of $2 or $3 million and built out an ag tech offering with sensors placed in facilities, capturing airflow, humidity, working on algorithms to proactively predict pest outbreaks and therefore decrease chances of losses, increase yields. And it was just too early. Like the data was great, but the clients didn't have the data scientists on staff to interpret the data and use the data. So I still believe in that portion. It starts with sensors and the data and adjusting your facility accordingly. Eventually, that data will feed the brain of the facility, which today is the environmental controls, and the environmental controls will make decisions without humans. So today, data to human, and humans adjust environmental control systems. Future, it's data to controls. So AI will play a key role, but we're not there yet.
Sounds as though URBAN-GRO was ahead of the curve on that front then.
Yeah, I guess, unfortunately, right? Because we burnt cash, but we have a very strong senior vice president of technology, and we have our eye on that prize as well for the long run. But for now, today, after burning $10 million and taking 5 quarters to diversify the company, we're laser focused on generating cash again, and hope to deliver that to the market very, very soon.
Okay, that's fantastic. And just finally, just talk about, there's only 3 or 4 months left of the rest of the year, and you mentioned you're kind of laser focused on perhaps diversifying the company. What else have you got lined up for the last few months of the year?
So we have the diversification is is complete, and we're working in now multiple sectors. We just built a company-wide business development team before we had a sector-specific team. So now we have a team led by one of the leaders of the acquisitions we made, and it's allowing us to get to market and build relationships quicker and focused on a regional basis as opposed to having really duplication. So that's one of the economies of scale we've been able to take advantage of with the acquisitions. We are also focused now on just delivering results. We have to walk the talk, and I think in Q1 this year we had a trough quarter. The market assumed that we needed to raise funds, and for a micro cap right now, if you're going to need to raise money, you're going to be hurt hard in terms of dilution. We don't need to raise money, and so what I need to do is just make sure we walk the talk and show the market that we know how to run a profitable business and generate cash.
Right, Brad, you've been fantastic. I really appreciate you taking time out. Really interesting, and I think our listeners would be interested in knowing about URBAN-GRO and also about your offering. So thanks very much for taking time out to speak to us. That's been the Future Food Finance podcast.